How debt investment can be a powerful bet for financial success. Debt has long been a controversial topic in personal finance, with many people viewing it as a financial burden that should be avoided at all costs. However, when approached with a prudent and strategic mindset, debt can be a powerful tool for building wealth and achieving financial success. The key to using debt to build wealth is to have a solid financial plan in place. This means having a clear understanding of your financial goals, a budget that outlines your income and expenses, and a strategy for how you will use debt to achieve those goals. It also means having an emergency fund in place to cover unexpected expenses and paying off any high-interest debt before taking on any new debt. With a solid financial plan in place, a savvy individual can begin to explore different types of debt and how they can be used to their advantage. 7 powerful ways to use debt to build wealth. In recent years, the word debt has developed something of a bad name, but the truth is that not all debt is bad. In fact, some types of debt can do you a power of good. Going further than that, good debt is one of the best ways to start leveraging the power of your money and creating passive income streams that help you develop real wealth. Without debt, very few people would own a house or be able to use their high earnings to start building their empire. Here we take a look at the steps you can take so that your debt serves you well rather than endangering your financial future. The differences between good debt and bad debt. It's important to understand what we mean by good debt and bad debt. Good debt is the type that allows you to accumulate assets that will increase in value. The loan interest is often tax deductible, and you can use the income derived from the asset to repay the debt. Examples include property, shares, investing in managed funds. Bad debt is the type that buys goods, services, or assets that have no potential to generate any income and/or depreciate in value. The loan interest is non-tax deductible, and there is no income from the asset to pay back the debt. Examples include credit card debt, if not repaid within the interest-free period. Personal loans to buy cars. Most family home loans. Using the power of good debt. You can take several steps to get your personal finances in a position to start using good debt to create wealth. Here are 7 of the best. 1. Debt consolidation. Servicing multiple debts is costing you way more than you need to pay in interest and fees. It can often benefit you, for example, to increase your mortgage and use the extra funds to pay off other, inefficient bad debt like credit card balances and personal loans. Your home loan repayments may stay the same, but you will use its lower interest rate to pay off higher interest debt. 2. Making your savings work harder. Many people like to keep money in a cash savings bank account as emergency funds or a buffer, making them feel more secure. The fact is that this money could be more wisely kept in an offset account linked to your mortgage. You will earn a higher after-tax return and reduce the term of your home loan, all without locking up the funds. 3. Better cash flow management. Managing cash flow is key to minimizing bad debt. The main idea is to reduce interest payments. This can be done by increasing the frequency of payment on a mortgage, increasing the amount paid, paying your entire salary into an offset account, or using an interest-free period on a credit card to pay for daily expenses, freeing up other funds for paying off your home loan, without paying any interest. 4. Borrowing to create wealth. Once you've minimized the bad debt, it's time to start creating some good debt. This is called gearing. Providing you invest wisely and your assets increase in value, gearing helps you create wealth, as the income and capital growth from the investment pays off the debt and exceeds the costs of servicing that debt. Property or shares are often a good strategy here. You can create the extra funds by borrowing against the equity in your home, taking out a margin loan, or investing in a managed share fund. 5. Using lump sums wisely. Occasionally you may receive a large lump sum of money from bonuses, inheritance, etc. Try to use this to pay off bad debt, or perhaps consider making extra contributions into superannuation. 6. Debt recycling. Debt recycling is where, as you pay off your home loan, you redraw the equity you have built up to invest in shares or other property. Again, the bad debt becomes a good debt that can earn you an income and can be used to pay back the loan, as well as providing tax breaks. Any excess income can also be fed back into your home loan to pay that off quickly and make further interest savings. 7. Invest in a geared managed share fund. A managed share fund is internally geared so that you don't have to take out an investment loan yourself, yet you can still benefit from the gearing effect of borrowing to invest. Here the fund manager borrows, at wholesale rates, on behalf of investors to invest in international or local share markets. With all of the above steps, it's important to get quality advice and to understand the risks and the potential returns. It's important to remember that using debt for wealth creation also comes with risks. If one is unable to repay the debt, they could face serious financial consequences, including bankruptcy or foreclosure. It's essential to have a safety net, a plan B or alternatives that can help one comfortably repay any debt they take on. Using debt to build wealth can be a smart financial move when done responsibly. By leveraging debt to invest in assets that appreciate in value, investors can potentially earn higher returns and achieve their financial goals faster than they would otherwise be able to. However, it's important to carefully consider the risks and ensure that one has a solid financial plan in place before taking on any significant debt. With careful planning and a solid financial strategy, using debt to build wealth can be a powerful tool for achieving financial success. Thank you for watching. If you like this video, please consider subscribing to this YouTube channel. Thank you in advance.